Hi, everyone. Welcome to Screw the Stock Market. We're so happy to have you tune into the show today. We are talking today to Brandon Cobb, who is a real estate investor. He's doing very exciting things, very much focused on one of the biggest problems in real estate. One of the biggest problems in America today is this supply shortage of affordable housing. As a realtor, as a real estate investor, we're very much conscious of this, that affordable housing for people who are just starting off or kind of just on the lower end of that economic market, it's tough. There's just not enough houses out there. And Brandon shares some of his insights. It's just a really great interview. What do you think about it, Aziz?
It was good. I mean, it's very informative about, just the industry in general, construction. Brandon's specialty is kind of a real estate, it's a kind of fund company where they do construction and they take in funding from the Tennessee, particularly Nashville area.
Hey, Aziz,
So it's
can
a
you just
great.
repeat that? Can you take it from the top? Like the connection went off.
Sorry, you glitched for a second there.
Yeah, that's what I was asking you. Can you just repeat your whole thing? Because it wasn't recording. It glitched the whole time.
Uh, no worries. Yeah, I thought that it was a really good interview process. I mean, Brandon is the CEO of HBG Capital, which is like a kind of a wealth or yeah, it's an investment fund for real estate. And they focus on passive investments in construction projects. His company takes on investors who are completely passive, and then him and his affiliates and different partners will go on and they'll find these great properties and actually do brand new affordable housing constructions from scratch. And they have got like a huge network of strategic partners and involvement with city government and whatnot that creates these really great wealth building opportunities for passive investors. So if anyone who's interested in passive investing in affordable housing in the southern region there, I think this is the episode for you.
Yeah, no, it's really great. And, in addition to just his actual business strategy for finding good deals and turning them into great returns for investors, he also shared a lot of really great general content for any entrepreneur, right? If in terms
Yeah.
of hiring and bringing on stellar talent to get to help you achieve your goals. And it was just really,
Partnership,
what was that?
partnership building.
Yeah, partnerships and relationships and creating content. And it was just overall very useful content, very useful lessons from Brandon. So, I really hope you take away a lot from the episode. This one is definitely going to be one that I'm going to listen to several times to try to make sure I capture everything from it. But it was just great. I think so. Without any further ado, enjoy the show and thanks for tuning in. Hello, everyone. Welcome to Screw the Stock Market. We're really excited to have you with us today, Brandon. Our guest today, Brandon, you're a real estate guy. We're just really happy to have you with us. You're doing some things that are exactly what I want to be doing. So I'm really happy to be talking with you, Aziz. One of the things that's been really good ever since you joined the show has been slowing us down whenever we have real estate and avoiding us from going into the jargon and all that and just keeping us plain talk, right? And from
Okay,
the few minutes we've
keep it
talked
simple.
already, yeah, we keep it simple. I don't think that's going to be a problem, Brandon. It sounds like from our brief conversation so far, I think you're a straight shooter. It seems like you're super easy to talk to, a great communicator. So we're just happy to have you, man. Thank you.
The bar's been set high. I appreciate y'all having me on. It's an honor.
Well,
And
go ahead, Izzy.
and I would just say, for those of you who don't know Brandon, he is the current CEO of HB Capital, an expert real estate consultant and investor. He's been featured in REI Wealth magazine and Forbes. You got some big titles behind you there.
Yeah, I was blessed to write an article for Forbes that got published. I thought that was pretty cool. It's how to compete in a hyper competitive market. I wrote it during the time everyone was struggling to find deals. And I felt like, hey, we're good at this. We're not having that problem. Why not throw out some points that are really working for us? It was really well received. I was really honored to have that published. It was pretty cool.
Awesome. Well, I know a lot of our listeners are going to make sure to tune in and check that article out because that is still honestly a challenge, right? I'm sure the market right now has maybe cooled a little bit and it's a little less crazy, as it was a few months ago. But I think principles like that and getting good deals, the best deals are still going to always be in demand, right? There's still always going to
Well,
be good opportunities. So,
let's not say cool down too much, because as you know, Alex, I mean, we're both in the DC area. There's nothing cool about this market right now. Every time I try to look at housing prices here, it's insane.
yeah, yeah. I mean, I will say just from my experience, right? It's better when you have, as a realtor, when you have an offer and you have a client and you say, hey, we want to make an offer on this home, and there's only 3 offers on the home or 5 offers on the home, compared to a few months ago when there was 20 or 30 offers on the home. My chances of getting a deal under contract were pretty negligible back then. And so a cool down is still relative, but yes. Um, Enough about that. Let's get Brandon. We want to talk to you. We want to hear your story. We're really excited to just normally at the beginning of these shows, we always want to hear just a little bit about who our guest is, how they got to where they are, and later we'll jump into kind of the real, I guess, lessons for us and for the audience in terms of investing and entrepreneurship and some of that. But if you wouldn't mind sharing with us a little bit about your background and how you got to where you are, we'd really appreciate it.
Sure. I'll share like the here, and then we can go back, retrace all the steps. So managing partner of HBG Capital, we're a vertically integrated real estate investment firm. We assist investors to build their legacy, achieve their dreams, and impact those around them through unique real estate investments. Everything we do is built to be transparent for the investor and designed to be insulated against market volatility. We see a lot of unique opportunities right now, especially with affordable housing in the single family sector. We can kind of jump into that a little bit more later. But once upon a time, I was in medical device sales. This was my dream job. I had this goal of going to college and getting a great degree, major in some kind of medicinal bachelor's degree that was going to give me an edge into this lucrative sales career. And it took me 2 years to break in. And it was hard. It was that chicken before the egg. Hey, we like you, but you need experience to get a role here. And I'm like, well, how do you break in if you don't have any experience? So spent 2 years chasing my tail, trying to figure that out, networked my way into the industry, loved it, thought it was the coolest job in the world, was working insane hours, but it never felt like work because I loved good money, got to wear scrubs every single day. I thought that was neat. I won all these sales awards. And then one Friday, I got sat down at Starbucks with my boss at the time, and I never decided that the surgery with this surgeon had gone really well, and I was like, man, I think we've really got a shot at getting this guy's business. And he fired me. And it was a huge shock to me. I was like, what's going on? Well, like, why am I getting fired here? And at the end of the day, it was the biggest lesson that I took from that was you can work as hard as you want for a company. You can be as loyal as you want to a company. You can put in the blood, sweat, and tears. And at the end of the day, that company has to do whatever is best for them. And for whatever reason, I wasn't a fit. And so I got fired. And that's what really set me on this path to, holy crap, I can't depend on a corporation to take care of me and my finances. I need to figure out how to do this on my own. So I set off on multiple entrepreneur adventures. I wanted to be the next Tony Robbins, right? Huge idol for me. Loved the whole life coaching thing. Was very passionate about helping people. Business failed. Started a motivational blog. Business failed. I started a course on how to help people get into medical device sales because that's what they teach you how to do when you're first starting out. What are you good at? That business failed. Real estate was the first one that sort of took off. I've never had this passion for real estate or always knew I wanted to be a builder, building neighborhoods in Nashville. If you told me 7 years ago we'd be doing what we are today and helping our investors and our team, achieve everything that they've set out to do, I would have looked at you like you had 7 heads. I would have never in a million years thought that I'd be in the construction industry, but here I am. And it all started with flipping that first home that was an hour and 20 minutes from where I lived. Literally met a mentor. because I knew I needed to find a mentor. And so how I did that was I started going to all these real estate meetup groups and figuring out who it was I needed to make a mentor, figuring out what it was that they needed and were trying to achieve, and just help them go after it. So after going to more meetups than I can count, me and this one guy were the only two that showed up to this one meetup. I think it was like the cash flow quadrant with Rich Dad Poor Dad or something.
Yeah.
We're supposed to get together and play this like game or something at a Starbucks. No one showed up except me and him. We start talking. He was looking to get operations up and running here in Nashville. He had a big Airbnb portfolio in Colorado Springs, and he was really wanting to get the wholesale and fix and flip business off its feet here in Nashville. And I was like, well, what do you need? And to this day, I always ask these questions if I'm in a networking event, because I'm trying to figure out how to add value. And I'll ask people, one, what's your goal? What are you trying to get to? What's the dream? And then the second question I'll follow up, well, what are your big obstacles you're facing right now that are in your way? I'm trying to figure out how to add value, right? So I asked him that, and he said deal flow was a problem. And I said, well, how do we get you deal flow? And he's like, well, best way to do it on a budget is to do, driving for dollars, where you get your app out, you drive around the neighborhoods, and you put all the dilapidated haunted houses in your book or app or whatever, and then you send them a mailer and say, hey, I want to buy your home. So for the next 6 weeks, I spent 4 or 5 hours a day driving neighborhoods. I can honestly say I've driven 90% of the roads, not just Nashville, Tennessee. I'm talking about all the suburbs around it. We got this big list of about 5,500 properties. We started mailing it, and all the profits we just kept dumping back into the business over and over and over again for years. And when you put that investment back into yourself and your employees you hire and your coaching programs and your strategic partners that you bring on board, beautiful things can happen. And that's how we got to where we are today.
Now, that's really encouraging and really inspiring. But I have a question, though. How are you supporting yourself during this time? I mean, driving, that's a lot of gas.
It is a lot of gas. It was 5 weeks. I don't think gas was $6 a gallon right then. I think it was maybe like $2 a gallon. So surprisingly, it wasn't a ton of gas money, but I'd done a really good job while I had a career in my early 20s of living well below my means. I was a bookaholic. I love self-help. I read every book underneath the sun, every single investing book, and they all said, live below your means. And so that's what I did. I could have lived at a $1,500 per month downtown condo, 8 years ago. I think that's what they were going for. Now they're, probably double that. But I chose an $800 a month little condo out 20 minutes from downtown. I could have been going out to dinners every single night. I like to go to the grocery store and buy all my stuff because I'm a health nut. So I did a good job of saving my money. I think I'd saved up about $110,000. And so I had that money to live off of. And let me tell you, I wish that I hadn't had that money, because when you have money and you're starting a business, you blow it all. Your business sucks up all the money. And I really would argue that I didn't start growing and learning how to be a true business owner until I ran out of money and had racked up, $90,000 worth of credit card debt to keep the business going. So it was a very, very important learning point for me at that time period. But I did have some money saved up, ended up blowing it all. And that's when the learning really started to take place.
Oh, crap. Well, one thing I'll say too, just as an aside, we won't put this in the show, but just if there is there's been a few nuggets already that I really kind of wish we have this other view here where we zoom in just on you. And so I might just at some point ask you to hey, could you repeat that? We'll put that in the zoom in shot for you. But that's really awesome stuff. So that's a really great background. That's super exciting, and there's a lot of really valuable nuggets in that story. I mean, first of all, I really appreciate you sharing some of those things that didn't work out for you, right? Some of those entrepreneurial ventures that didn't, because I think very often a lot of people come on the show and it's just been win after win after win. And, for us, we always try to keep in mind who's listening to the show, and we always think of ourselves, hey, 5 years ago, the idea of ever quitting my job seemed hopeless. I honestly felt like, oh, I guess I just have to work here until it's over, until I'm dead. And so I imagine that someone who's kind of stuck in the rat race and wants to somehow escape, build wealth, and build kind of that life of significance and meaning for themselves. A lot of the same things that you talked about, but might not really see how to get there just yet. And so some failure is going to come across. It's going to happen. And I really appreciate you sharing that because, it takes some grit to be able to get knocked on your butt and get back up again and keep fighting. So really cool to hear that and that you were able to do that. In terms of other lessons from that, I think one of the other things that I really appreciated too was because I'm kind of in that situation right now. I had my savings to be able to quit my job, and I'm living off of that right now. And I'm really trying to grind and produce some money to make sure I'm not at that point. But every month it just goes a little bit down every month that savings. So I'm hoping to avoid repeating your mistake there. So these conversations are really helpful. I mean, honestly, this show is really selfish for me too, is to be able to learn from people who've been where I am, who are where I want to be. And so we'll try to get to some of that so that I don't have to blow all my savings before I start learning those lessons. Well, Brandon, why don't we start talking a little bit about some of the next steps and maybe some of the other content that you'd like to share with our audience about the opportunities that you have and
what are you doing
other lessons. Yeah.
Say that again. I'm sorry, you broke up.
Basically, just kind of go let our audience know what are you doing now, and what can they get out of your experience and your journey that can kind of help them in their process.
Sure. So what can the audience get out of my experience and journey that can help them with their process, Scott? I mean, there's so many lessons learned along the way. I don't even know where to start. I keep this book right behind me right here. It's called Who Not How by Dan Sullivan. And it's a constant reminder that whenever you get lost in the weeds on something, or you're trying to figure out how to do something, don't. Find who has already figured out how to do what you're trying to accomplish and figure out a way to attract them into your organization. It completely changed our whole view of hiring. We don't hire someone right now with the idea of like putting a ton of time and effort into training this person. We've got onboarding guides to give them the bumpers and barriers they need to, stay in their lane and, do what they need, get up to speed on how we run as a company, the systems and processes we use, the software we use. That's great. But if I'm hiring a superintendent to run all my projects, if that superintendent can't come into our organization during the interview process and during a ride along, point out gaps and inefficiencies that we're having, that person doesn't get hired. If they can't come in and show us problems and issues that we're currently not aware of and how to improve our current systems and operations, we don't hire that person. Your hires should come in and own that department. Whatever you're hiring them for, they should be able to teach you something during the interview process. I don't call them hires or employees. I call them strategic partners because that's what they are. If you hired somebody who's not as good as you or better at a certain position, you hired the wrong person. And this was my mistake going on because one of the last positions that, we hire for when there's a process for hiring, right? First is who you need most and what you're not good at or what you don't enjoy. So whatever you're not good at or you don't enjoy, don't do those tasks. Do what you're really good at and hire that position last. For us, that was the sales role. I was a very good sales rep. That was my background. Hardest role to let go of. We hired a sales rep. And I saw this young, motivated, high integrity individual, very likable. And I was like, man, I see something here. He didn't have a sales background, but I was like, man, I see me. I saw the old Brandon trying to break into medical device sales. And I was like, he just needs a shot. He just needs a chance. So onboarded him, spent tons of time and effort getting him trained. I mean, it was a lot of hands-on work, got him up to speed. He was only with us for a year, right? Wasn't a good fit. Sales wasn't for him. And they say that when you lose somebody or you hire the wrong person, really it costs you like 5 or 6 times their salary, not in direct costs, but in missed opportunity cost of what they could have made had they been the right fit for the position. So that was another huge learning experience for me as well around hiring. Hire last what you're really good at, and make sure that when you're hiring, hire those strategic partners. Those are two humongous lessons that I've learned along the way. And to this day, we still follow that rule. I wouldn't say that I repeated the same mistake that I had when I had $110,000, but I repeated a similar mistake when we grew in scale, and we'd been doing business for 5 years, and we were trying to scale all of our new construction. We were using all of our own money, and believe me, when you're trying to do 30 new construction projects, you can run out of money really fast between down payments to the bank, the monthly interest payments, the money needed to run your business. And so it wasn't until we learned how to bring more strategic partners into our business, AKA investors who wanted to invest in our deals because they saw a great opportunity and wanted to receive passive income that was secured by what we call recession-resistant real estate. That was a strategic partner. And when that happened and we realized, wow, other people can participate in these deals that we're doing, it allowed us to pull all of our own money out and reinvest back in the business in the form of more employees, better coaching, strategic advisors who've been down the same path that we are. And like a machete cutting through the jungle, we were able to just cut out all the BS, all the obstacles, because we were able to align ourselves with those strategic partners that already had the way paved. So that was the whole reason we created HBG Capital, is we had the sales arm built. We could find all these off-market deals, go direct to sellers, manage the whole entitlement process from start to finish, never buy it until it's ready to rock and roll, to supply the capital, and truly don't want to be involved except to just get updates and money to their bank account. That was another huge learning lesson for us. And so that's where we're at today.
Amazing.
That's it.
Now you mentioned at the beginning your mentor, right? How you partnered with this mentor to be able to help get their business off the ground. Is that still someone that you're working with, or did you go off and do your own thing without them?
He is still my business partner to this day. It's been 7 years, and we've just had a wonderful partnership. There's a lot of synergy. I've learned a lot about what goes into great partners. And quite frankly, I just got lucky. If you do this business long enough, you see a ton of other partnerships out there, and they just don't last. And they don't last because at some point, the partners don't share the same vision anymore. There's a fork in the road. And that's when things usually, I don't want to say go south, because a lot of times partnerships in for the better. But I've noticed that his and I vision, it's still continued to align to this day. And there's synergy there where I've personally managed construction projects. I've done it before. I'm not made for the construction industry. I have screamed at 5 grown humans. 4 out of those 5 were while I was managing construction. And I swore that if I could never walk onto a single job site ever again, I would be happy. And so, my role in the organization and what we strive to do here at HBG Capital is give everybody their superpower, opportunity, or superpower. My partner's superpower, he is phenomenal at finding deals and managing construction projects. And he likes it. I'm really good at finding strategic partners, hiring, and raising for our deal. We try to do that with everybody in the organization, whether it's my executive assistant, or it's a superintendent, or a construction or a project manager or sales rep. We try to make sure that we can offload everything off their plate, where all they do every single day is focus on their superpower, what they're really, really good at. So that synergy between my partner and I, it's been great, because he's filling in the gaps that I don't want to fill in, and I'm filling in the gaps that I'm really good at, or he doesn't want to be a part of. So it's been a really good, and I'm going to call it what it is. If you go into business with someone, you're getting married to that person. Shared bank accounts, shared finances, shared roller coaster ride. Like, it is a marriage in every way, shape, or form. So you want to make sure that your core values also align. Neither him or I have egos. We're both very humble. We read the same books. We both enjoy constructive criticism. We're straight to the point on the phone to solve the problem. So we have a lot of the same core values that have enabled us to interact on a daily basis, where we don't get sick of each other. That was another thing that I learned about partnerships.
How beautiful. Now, do you offer, and maybe, I don't know, Do you offer passive investments? Because again, some of our audience might be looking to invest passively. Can you share a little bit about the types of investments that you offer and maybe what they look like?
Yeah. So our whole goal is to assist investors to build their legacy, achieve their dreams, and impact those close to them through unique real estate investments. Right now, we see a unique opportunity in affordable new construction projects. Now, when I say the word affordable, I have to kind of backtrack. I'm not talking about Section 8 housing or government housing. While I do think that's good, it has its own new. What I'm talking about is we invest heavily in what we consider the lowest supply, highest demand real estate product in the country right now, which is homes for first time home buyers. Nobody can afford anything anymore. So we want to be in, the fastest growing cities in the United States. That's one of the reasons why we really like Nashville. It's been one of those cities the past 7 years, high growth state, no income tax state. Businesses are moving here in droves from these higher taxed, New York and California states. We really like that. And if you price out the suburbs of, Davidson County, Nashville, you get this beautiful, affordable product that is so needed right now. So people are just flocking to Nashville from a variety of reasons, not just because, it's Music City and it has very attractive demographics and it's a great place to live, but it's still affordable compared to the rest of the country and it's not being taxed out the wazoo. So all that is a recipe for a great place to invest. So our company will go, we will find the deals, we will entitle the land. Once everything is entitled and we are good to go with the city and we have their blessing, then we will raise the money for the project. We will buy it. We will develop the land. At that point, we might sell the land off to another developer. If what I call stupid money comes in, there's a lot of stupid money chasing these build to rent portfolios right now. And so we've got about 140 pads under contract right now with a build to rent hedge fund that, hey, if I can get my money sooner and not have to build them, and our investors' money sooner and not have to build them, I'm going to do that. So we'll either do that, and then if we don't get a stupid money offer after the development's all done, we'll take it vertical and we'll build it ourselves with our own GC license. And we put it in a position where all the investors get 100% of the equity and the profits as the homes sell until we pay them back all their principal plus the ROI that we promised that we'd give them. Usually amounts to the first 33% of the homes, and then the remaining homes we profit off of. That's how we've got everything set up so far. So it's great if you're somebody who's interested in wealth preservation and you're bullish on affordable new construction products in high growth cities in the United States and no income tax states, then, reach out to us. We'd love to set up a call with you and see if it's a fit.
Very cool. Yeah, I mean, I think, one of the things I've seen is a lot of the government policies that have been put in place over the last years have been focused on encouraging demand, right? And making home ownership more affordable. But that's not really the problem right now. It's supply. And
there are no houses.
The government needs to be giving you a bunch of investment so you could just rock out and do what you need to do at scale. Because as much opportunity as there is, I'm sure you're a drop in the bucket compared to the overall problem of supply. So I think that's just a brilliant place to be doing business because it's needed. And again, for me, as an apartment investor, same kind of thing is that's a big part of why I believe what we're doing is smart too, is just because, as so many people are priced out of home ownership, they end up having to rent. And so giving someone decent, affordable housing, even if it's for rent, is still it's a winning project these days. And so I'd be curious, what are your projections over the long term? Like, what do you, obviously all the turmoil right now, everyone's feeling recession and inflation seems like it just started now, even though I'm curious, what do you think is going to happen over the long term?
When you say what I think is going to happen over the long term, like what specifically?
In terms of supply and demand for affordable housing, like, do you think that the construction industry can catch up to where it needs to be for demand?
at least in the short term.
It's going to be a while. It's going to be a while. If you look at the number of housing starts and you compare them to, the previous, crashes and recessions, I mean, we're just nowhere near where we need to be. You got to think there was no inventory that hit the market from 2008 all the way to almost, I'd say 2011. All the developers went under. All the builders went under. Everyone was scared. Is the economy just going to collapse? So you got to think about that. The human population is on an exponential growth curve. And I think a lot of people don't know how to visualize that. We as human beings, we think in terms of linear growth. Mm-hmm. So I take 1 step, it equals 1 foot. I take 10 steps, it equals 10 feet. But if you were to apply the exponential concept to taking footsteps, 1 step, 1 foot. And then that second step, let's say you doubled the distance from your previous step. Well, that's 2 feet. So now you've traveled 3 feet. Then 3 feet, next step is 6. And then you go from 6 to 12 and 12 to 24. Well, if you take that 10 step, if you do the math, you've traveled it's like over 1,000 feet. So same number of steps, different concept, exponential growth. Our human population curve is just going through the roof right now. It's like a straight up trajectory. And you didn't have any supply hit the market for almost 40 years back then. And then COVID comes along and just exacerbates the problem because all the factories shut down, the whole world shuts down, right? All the trade, not just the factories here, but the factory overseas. We buy a ton of products from China. Everything shut down. And so you've got, almost 5.5 years worth of supply that never hit an exponentially growing population. I mean, that in itself is a fundamental supply problem. And it's tough to build affordable products when you have this increasing the cost of construction because the builders are just going to pass it on to consumer. When you've got way more buyers than you have sellers, causing prices to increase. So I think we've got a long way to go with the affordable housing issue, not just for, the government Section 8, but for first-time home buyers as well. And I think that's why you're seeing a lot of these unique products that had never been around before, like build to rent, do so well because they know that rents are going to just increase exponentially because nobody can afford to buy anything.
Now, how sustainable is it to be able to continue to build some of these properties considering the supply chain issue? I think I was just reading today that there's going to be another shutdown in China, which is where most of our supplies come from anyway, with new COVID variants popping up over there. So how is that impacting the overall construction market? Not even the buyer's market, but the construction market itself.
Yeah, extreme volatility in prices, right? I mean, just look at lumber. Go pull up lumber's future chart and look at the past 20 years, and you're going to see this, your typical kind of gradually go up and down, wavy line, and then it just immediately stops, and it looks like a heart EKG machine, right? Just sharp triangular motions all over the place after 2020. I mean, it's crazy. What we're doing to mitigate the risk of construction costs, because we did feel it when things went up and down, is we're raising more money in our syndications from our passive investors to purchase more of the materials up front. The drywall package, the wind, everything we can, as much as we can up front, because that locks in our pricing. And that way we don't get hit, 3, 4, 5, 6 months down the road with a price increase on something we haven't purchased yet. And what we're also doing to combat the supply chain issues is we've rented 2 warehouses. And so we're putting a ton of overstock supplies that have these supply chain issues into those warehouses so that we have them when we need them. So we're just constantly feeding the warehouses and just pulling from that overstock as needed. I really don't see any other way to do it. So until these, construction prices come down, that's what we're doing. We're also building smaller homes too, where a lot of our products were, 1,900 to, 2,300, square feet. We're bumping those down a lot. We've got products that are less than 1,600 square feet. So we're trying to give the market what it wants, which is affordability.
That's great. That's great.
Brilliant. Yeah, that was going to be my next question is how are you making things affordable, right? With all these, it's getting more expensive in general, but I think also like homes nowadays are generally bigger. So you answered that question. I'm sure even building code, right? Current building code compared to building code 20 years ago is cheaper too, right? I'm sure things are getting more expensive there, but So right now, what's the average price of your homes? Like, how are they affordable? Because my impression has always been it's relatively hard for a builder to just make a home affordable and still be profitable.
Yeah.
So you have your vertical integration, so that's already probably a big part of the puzzle there. But what other things are you doing to be able to keep these homes affordable, and what's that?
Well, it all starts with finding good deals on land. And a lot of that's going to be in entitling the land. You've got to take a piece of land that is not worth much and make it worth a lot. So how do we do that? What we do is we go and we engineer the vision of the city. So we'll actually go set meetings with the local, mayors of these suburbs, the planning commission, and we'll ask the city, where do you want density? What do you want to see? What's the goal? How much tax revenue are you trying to collect? What do you want to do with that tax revenue? What areas do you want to see businesses thrive and grow in your community? And they're like, wow, this is really cool. We've never had someone come down and sit down and say this. And they'll literally get a map out and they'll show you what they want. They'll show you the areas everywhere. That way you're not having to shove some development down their throat. And we just go to those people. So we have a very small pool of people that we reach out to because we know the specific areas that the politicians want to see developed. And what we'll do is we'll take an agricultural piece of land that's worth hardly, nothing, and we'll rezone it for high density. So we've created the value, not just for ourselves and our investors, but for the homeowner as well, because we can pay them, to them 2-3 times what it's worth is a lot of money. But, if we 25x the value of it, right, that's a lot of equity we just created for ourselves and our investors. That's how we're able to create these affordable homes. Is it starts on the front end with finding really good, deep equity off market deals and adding value to the local municipalities and to the sellers you're doing business with. After you do that, it's tough managing the prices of homes. So we don't put a ton of time and effort into trying to manage the prices of homes. We have a team that does that. But, if we get lucky, we might be able to shave, 7% off a project by really hitting the ground and running hard to price out materials and which we don't like to do for prices. Like, we don't want to be in that game. I'm not trying to go hunt a 7% price decrease so I can give someone affordable housing. I want to create land opportunities to build on where there's all my equity there, where I can have the biggest screw up in the world and my equity is still fine because we found such a great deal. So it really does start on the front end.
That is very exciting. That's really smart.
Yeah, that's really, really smart.
Amazing.
I mean, you already know where to go. You removed all the guesswork.
Yeah.
Now, one other question that occurred to me was, so since you take money from investors and I have those conversations pretty frequently myself. I'm always, the way I generally structure my conversations with investors is almost in an advisory kind of role where I say, if you're going to consider investing with me or anyone else, here's generally how I'd recommend you look at a deal, look at an opportunity. But I'm curious, how do you generally advise for some of our listeners if they're considering investing with you or me or anyone else? How do you recommend for people to analyze a deal as a passive investor?
Yeah. So I'll tell you a story about 2 recent investors that we have, this morning. They're putting money into one of our opportunities. I spoke with them and they're excited to jump in. One of them found me through a mutual friend. So this mutual friend had been investing with us for years, had a good experience and referred us. The other investor, I believe it was his dad, I want to say, that he referred us to. So we get a lot of these referrals just because, we've turned and burned a lot of our investors' money over, 5, 6, 7 years, 8, 9, 10 times, and they're really happy with it. And so at that point, they start recommending people. But traditionally, what we do is they come to us and they're interested in learning more. We send them to our website, hbgcapital.net. It's .net. I joke because .com, I guess we couldn't afford .com or something like that. I think it was already taken by somebody, but hbgcapital.net. We say, hey, read our free ebook, Recession Resistant Passive Income. It's free. And read our free ebook, 100 Questions Passive Investors Should Be Asking Before Investing. I wrote that second book because an investor came to me, had all their capital confiscated by a real estate investor. And I swore that I never wanted anybody to go through what this person went through ever again. So I wrote that book because the best thing you can do, even if you're a veteran or you're just starting out into something new, is ask the right questions. So if you can ask the right questions, you can get the information that you need to know. The biggest mistake I see people make when they're first starting out is they just don't know what they don't know. They don't know what questions to ask. And so that book, it's under our educational resources tab at hbgcapital.net. You can grab it there. But it starts with educating them. So after they've gone to our website and absorbed some of our free content, they can go to our Calendly link and schedule a call. And on that call, we ask some very basic questions that are designed just to get to know them and what they're looking for. Hey, why do you want to invest in real estate? We want to learn more about your backgrounds. What have been some past investments that you've made? What's worked out really well? What hasn't worked out really well? What does a win-win look like for you coming out of this relationship if hypothetically it were to work out? We ask them if they have an emergency fund set aside, because we won't take anybody's capital unless they have at least 6 months worth of living expenses set aside. You'd be very surprised how many people want to jump in and throw some money at you who don't have an emergency fund. We'll ask them what the short-term and long-term plan is for the capital they're thinking about investing. So we're not just interested in the short term, but we want to see the bigger picture and how we can play into that and how we can potentially help. We talk about, their retirement accounts. A lot of people don't realize that if you've got 401k or a traditional IRA or a traditional Roth IRA, you can actually convert some of those funds over to a self-directed account, tax-free, right? You're not going to get penalized, and you can actually use the funds from that self-directed IRA or that self-directed Roth into real estate deals. And you get all the tax advantage you would if you had it in your traditional, Roth or traditional IRA. I mean, it's beautiful. Now, again, 100% transparency. I'm not a licensed CPA. I always consult with one before making investment decisions. I got to say that. But a lot of people don't know these things. And so we've got a ton of people that use their retirement accounts to invest with us, and they love it because it's growing tax-free in these vehicles, and they're gung-ho and excited about it, and they had no clue that they could do that. So our introductory call is all designed around getting to know them. There's no deals. There's no pitching things, none of that. And after we get to know them, what we say is, okay, we're going to send you some past opportunities that, have come and gone. Check out those packets. It's full of detailed information. Look it over, write down some question. If these opportunities are a fit, let's hop on another call, ask some questions around it. If you still think it's a fit, we can start to send you some opportunities after that. And if they say, hey, this is not a fit, they give us feedback on what they're looking for. And if, we're not the right fit, then I've got plenty of connections to steer them to somebody who is going to be a good fit. So we really try to deliver value even if we're not the good fit for them.
How beautiful. That's great. Yeah, I mean, it's funny you mentioned that, like objectives and investor kind of, it varies, right? What a person needs and wants at any given time. I had a deal recently, and I had two back-to-back investors where one of them said, oh, the timeline on this is too long. I want something where I can get my money back more quickly. Fair enough. Okay. Then the next call right after that, this timeline on this is too short. I want something where I can put my money, park it there, and just have it grow over the long term. And again, just different people with different objectives. And we were somewhere in the middle, not right for either one of those. But, good, meaningful conversations. And I can imagine how, that's a value add to be able to connect someone with other types of deals and other types of opportunities. So that's really smart. Brandon, thank you so much, man. Aziz, do you have any other questions for Brandon before we?
Yeah, actually, I had one quick one. Being that your expertise is in the fundraising side of things and, getting on the strategic partner, what has been the most helpful thing in terms of finding those types of people? Do you just, go out and just blindly market? Do you have strategic areas where, people are going to be at that you go to? I mean, how do you go about finding these types of individuals, whether it's, for fundraising or for, people that are going to work with you?
Yeah, so it all starts with creating your target avatar. For us, we have a lot of busy professionals that either have their own company, they're an entrepreneur, or they've, high level C-suite exec, or busy professional, and they don't want to quit their job and do real estate. They have all this money and they have a big tax problem, and they're looking to park it somewhere that's going to create residual income for them for the rest of their life. So we've created a target avatar. And when you understand like who your target avatar is, and for us, we do have a lot of entrepreneurs that invest. What we do is we're creating value-added content daily and releasing that value-added content on social media, to our email list, on podcasts just like this, sharing what we've learned, because the same struggles that I have as an entrepreneur, I can about darn near guarantee that other entrepreneurs are struggling with that. So a lot of our value added content that we shared, it's completely free on social media and our email lists. And these podcasts are, how to build culture in your organization, how to hire A+ rock stars, how to reduce your taxable income through commercial real estate investments and depreciation. What does all this stuff mean? So all the content that we put out is designed to be written towards these busy, professional, high income earning entrepreneurs that need somewhere to create additional streams of income. And when you do that, you feel like, you ever like listen to something and it felt like someone was talking to you? Like I read this book recently called Profit First for Real Estate by David Richter. And in the book, he was talking about, having cash flow problems with specific projects and contractor management and having the correct account set up. And I was like, this is the exact problem that like we've had in the past. I was like, holy cow, it's like he knows my business. So we try to have those aha moments with our potential investor base, building that content. So, we've just been blessed over the years. We've got an email list of 5,500 people who've signed up to receive our content over the years. Social media content every day. That's the best way to just get to know us initially. If you don't want to set up a call or, put your email into the, the free ebook, you just want to go to our social media website and follow us and see what kind of stuff we're putting out. We really do try to add value in each and every single way. And then
please feel free to name drop your tags or your handles.
Maybe we can post it at the bottom of the episode. I don't have it memorized, to be honest with you, but I can certainly send it to you guys after this.
Yeah, please. We'll put it in the show notes.
But you'd be surprised. Most of the money we raise, and I'm on weekly calls with new investors, it comes from referrals. And this is what I've learned from the people who are running these like humongous fund. They've raised $40-50 million. After you've been doing this a while and you've taken good care of your investor base and they've become raving fans, what do raving fans do? They tell all their friends and family about you. And so, the two people that I just signed up this morning into a new syndication, they were acquaintances of our raving fans. And that's what you're really trying to get to is right now you're hustling and bustling and trying to get the flywheel going. And once you start cranking up that flywheel, it's heavy. It's got momentum. It's going, even though you stop pushing it. So those are all the ways that we're currently finding people who are interested in partnering with us.
Very cool. That's awesome. Brandon, well, thank you so much. Do you have any last words that you'd like to share with our audience before we end our interview today?
I'll leave you with some advice that, my mentor gave to me, when I was first starting out, and I still continue to take this advice today. No matter what you're trying to do, if you're, trying to figure out how to invest your money, or you're trying to figure out how to get started in whatever endeavor it is that you're trying to get off its feet, create the problem first and then solve it, right? Don't make an excuse where it's like, oh, I can't go out and find deals right now because I don't have the money. Just go out and find deals and you get the money. Don't create that limiting belief that, I can't create passive income because I'm just not smart enough to do this, right? Get out there and start learning. Take the first step, because not making a decision, that's still a decision. And that's going to affect you either way. So create the problem first and then solve it.
Awesome. Very cool. Well, Brandon, thank you. This has been really exciting, really fun, and really relevant for us. Like I said, we're really, we're a few steps behind you, man. We're eager to catch up and hopefully we'll cross paths again. We really appreciate your time and really great talking to you. Thank you.
Okay, great talking with you guys too. Thanks for having me.